Here's a video of an interview with Roger Montgomery, who is a fund manager in Australia. He's all over TV. He's a talking head pundit. He does get a few things right. He's very big on fundamental analysis, and not so much on technical analysis. And in this video, he's very bearish on property when looking at the current supply. They do tell us that it's, the property in Australia is in short supply, so supply issues dictate the price to continue to go up. Now, whenever I hear someone say that, I just ask them to go and try and buy property in any area in Sydney or probably Melbourne as well, and I don't see them having trouble finding property to buy. It is a matter of what price you want to pay, fair enough. But is there a shortage? No. You want to buy a house, you want to buy a unit, they're there. Whether you want to rent a unit or a house, same story. You can always find it. So where's the shortage? But don't listen to me, make up your own mind. I always say that. Do your own research. This video is very interesting. I hope you enjoy it. Thanks.
We've had these record profits, of course, with the big four banks, and they were all driven by record low debt provisions. Now,
yes.
What happens to those profits?
So precisely at the time that that banks had been writing back their bad and doubtful debt loan provisions to boost profits, so that, if you like, the tank is empty, so to speak. It's precisely at a high point in the cycle for property. So I think what investors are really nervous about is whether or not an oversupply of property, which is what we're going to be seeing shortly, and we can go through those numbers in a minute. If those numbers do result in a slowing of property credit growth, then what does that mean for growth overall, and are we paying too much for the banks?
Well, indeed. Now, the bank.
So the big issue today, though, is all about property. It's all about whether or not we're going to see a problem on the property and the mortgage book for the banks.
And what's happening on the supply side there?
Well, what we've got is a very simple picture. We've got an oversupply of property. We are constructing something like 56,000 properties dwellings a quarter, and that amounts to about 224,000 a year, which is about 75,000 more than what we require for household formation in Australia, which is about 150,000 a year at the moment. So we are already about a year. We have a year of oversupply, and we're currently constructing another 50% more than we need. What is going to result from that? One of two things: either credit growth slows, and that means earnings growth for the banks slows,
yes,
and they're not able to lend as much, or supply continues to increase and we have a serious correction on our hands in the property market, and that means bad and doubtful debts go up. So they're between a rock and a hard place.